Is buying a house in the UK a dream or a financial nightmare? Let's dive into why the UK might just have the worst value for money in the global housing market. The UK spends relatively more on housing than other nations. Not only that, but we have the highest share of property built before the war and face one of the highest costs of housing per square metre. On the metric of households who pay more than 40% of their income on housing, the UK is the second worst in the world, second to only New Zealand. Housing is expensive around the world, especially in the Anglosphere. Places like the UK and New Zealand also have relatively low levels of housing supply. Now, the interesting question is whether the recent rise in interest rates will improve affordability in the coming years, or whether the impact on house building will create even more problems for the future. Home ownership is widely seen as an aspiration of British households, and if we look at the relative cost between private renting and owning with a mortgage, there's a big difference between the two models. This is why people strive and strain to take out a mortgage. But if we look at international comparisons, the UK home ownership rates are actually quite low. Home ownership rates peaked around 2007 and have been in decline ever since. And if we measure home ownership rates by the percentage of adults rather than households, the rate is even lower, as many young people have been forced to live with their parents or in bigger shared housing, and the UK has seen the biggest slump in home ownership rates amongst the young compared to many other countries. The simple problem is that housing as a share of income has increased dramatically since the mid-1990s. It's currently running at a ratio of 8 times income, and in major cities like London, Oxford and Cambridge, it's over 10 times income. And there's been only a very modest improvement in affordability since the 2022 peak. Now, since the credit crunch of 2008, there's been a new mortgage regulation to try and prevent the abuse of high mortgage multiples, and there's better stress testing. What this means is the housing market is somewhat more resilient, higher interest rates, but also that young people find it more difficult to buy, even if they would like to get away from the private rented sector. With median salaries running at £35,000 and barely increasing in the past decade, a standard mortgage multiple of 4 times income leaves a young worker struggling to get anywhere near current average house prices. It's not just about housing costs, but in recent years we've seen a squeeze on disposable income. We've seen taxes rise as a share of GDP, plus for the burden of student loans for young graduates. And then, on top of that, we've had record rent increases, and the rise in rent is not always fully captured by CPI because they use an imputed value. But the main problem the UK has is that we've had very low growth in real wages, whilst house prices and rents continue to rise. The result is that unless you have a very high income, parental wealth to help you with a deposit has become almost a key requirement for getting on the property ladder. The UK has become more unequal, with the Bank of Mum and Dad supporting 47% of home purchases in 2023. Now, for those who did manage to buy, especially recently, the recent rise in interest rates has caused a shock. With mortgage payments rising as a share of income to high levels in sectors like buy to rent, we've seen a rear rise of 50% as many struggle with higher mortgage payments. Now, the effect of high interest rates has been to slightly improve mortgage affordability, with a 14% fall in real prices since 2022. But the average buyer is yet to notice any real sense that buying a house is affordable, like it was in most of the post-war period. Last month, mortgage approvals did rise, admittedly from low levels, but it is still a sign that activity is returning to the housing market after a period of very low property transactions. Now, there's also been an increase in homes for sale, and this perhaps explains the, to some, unexpected fall in house prices last month, reported by Halifax and nationwide. But this all raises the question on whether the past 6 months is just a temporary bounce in prices, or a sign that a much needed correction is probably as much as you can expect. There is no prospect of further falls, because if demand can be increasing in this climate of high interest rates, recession and low income growth, then there's really no hope that UK housing will ever become affordable. However, before we herald a new chapter of house price growth, it's worth bearing in mind that there's good evidence, but house prices historically react to higher interest rates with a time lag. Now, one OECD study found that a 1% rise in interest rates causes an 8% fall in house prices. So with the UK experiencing nearly a 5% rise in interest rates, that's, in theory, a 40% fall in real prices. Even if interest rates were to be cut back to 4%, which is likely by the end of the year with inflation falling, it would still indicate that some house price falls are to come. Now, for those who are skeptical about the prospect of any further house price falls, don't forget this study was based on real life examples. For example, in Germany, house prices have fallen 20% since their 2022 peak. That's around a 35% fall in real terms. Now, is the UK market so different? But is it immune from any kind of big house price falls? Well, house prices did fall in 2008 and the early 1990s, but I think those hoping for a return to affordability levels last seen in the mid-90s are going to be disappointed, because only modest falls in house price to income ratios are forecast. It's not just about the income and the interest rates, but the impact of wealth propping up housing demand. So the result really is a two-speed housing market between those who can add wealth to buying a house and those who cannot. Now, one damaging impact of the higher interest rates has been cut to home building. The end of last year saw many projects either cancelled or not finished. Combined with high inflation, higher wages and higher interest rates have really made it difficult for home builders who've pulled back from many projects. The result is that suppliers are expected to fall further away from government targets, and the impact is particularly acute in the affordable housing sector. Housing associations are warning that they can't manage to build projects and have left many projects half finished. The National Housing Federation warned that funding for affordable housing is now inexplicably linked to interest rates because of a change in the funding model since the austerity of 2010. But this means at higher interest rates, they can build the 140,000 affordable homes that the UK really needs. Now, Labour does have an ambitious plan to build many new homes if they are elected next year, but the past 20 years do suggest that it's much easier to promise building housing than to actually deliver. And when the house building sector goes into recession and people stop working, it can be very difficult to get the building sector going again. It needs a degree of momentum. You can't just pick a number and say that's what we should build. Now, in the post-war period, the UK was building much higher quantities of housing, in particular social housing. In fact, despite selling off 1.5 million houses in the UK has one of the highest rates of social housing in the OECD. But the problem is that the UK has very much underdevelopment of the private rented sector. The loss of social housing and rise in population, partly due to high levels of immigration, have not been met. The FT report, according to some estimates, the UK actually needs to build closer to 421,000 homes a year to catch up with the backlog. But currently, the country is struggling to meet much more modest targets, and it's really hard to see a return to 400,000 homes a year, which we only saw briefly in the late 1960s, and that included many tower blocks which later got demolished. Now again, in international comparison, France is a similar sized country, and they've been building on average 370,000 homes between 2010 and 2017, and in that period the UK built almost half at 154,000. So you can see the difference in home building between the two countries. Perhaps it's easier to build in France because of more land, but whatever the case, France built a lot more, and building does make a big difference to house prices. London has seen relatively low rates of house building and the highest rise in prices. Texas, which admittedly has more space, has avoided excess price rises by being able to build more. Now, it's a fair point to say that sometimes supply is blamed too much for high prices. Certainly, the boom in house prices since 2009 was to a large extent due to the ultra-low interest rate. Some claim that the UK is actually a large number of empty homes and the number of households is not increasing as fast as the increase in new dwellings. However, again, it's helpful to look at the international comparisons. The UK has one of the lowest rates of housing vacancies. That spare houses not been used. Also, the number of houses per 1,000 inhabitants is very low in the UK. It's similar to Canada, New Zealand and the United States, all countries with high house price to income ratios. Also, don't forget that the number of new households is influenced by the high prices themselves, with many people living with their parents or in bigger households than they would prefer. But overall, it's private renters who are facing the biggest brunt of the UK housing crisis. Over the past few years, rents have increased substantially, and on average, private renters pay a higher share of their income than homeowners do, because private renters often have a combination of low income and high housing costs. No wonder there's such a strong desire to buy a house, but the problem is, for many people, it's still an unaffordable dream. In a nutshell, the UK's housing market challenges continue to mount, with costs soaring and affordability lagging despite various interventions. What do you think can be done to make housing more affordable in the UK? Share your thoughts and suggestions in the comments below. I hope you've enjoyed this video, and as always, I'll see you on the next one.